So today let's have some fun with finances, and let's talk about how a physician can earn less than a waiter. We'll tell two stories. The first is a new physician, just starting practice, who wants to maximize the return on her 403(b) savings plan. And second is a peak career physician who's a day trader. He's trying to make up ground for retirement by managing a portfolio, actively trading technology stocks. And for both cases, we're going to make an assumption supported by zero evidence. Both physicians we talk about will realize an economic advantage over the markets of 5% a year. Now note that is greater than the return advantage of the very best performing single mutual fund that's been around for the last 40 years out of more than 12,000 funds. So we have a new physician. She's saving to a 403(b). The max is $18,000 a year, which means on average during the year she'll have half of that, or $9,000 invested. She spends 1 hour a week, 50 hours a year, looking up information, managing her funds. And let's assume again, she beats the market by that extraordinary 5%. $9,000, 5%. She's earned $450 extra dollars a year at the margin. 50 hours, she's earned $9 an hour. Less than a waiter at Denny's. So, how about the peak career physician? We're going to give him a $250,000 trading portfolio, but he's going to have to spend some more time. He's going to spend about 30 minutes a day trading in between patient appointments, and 2 hours a day on the weekend to do research on his stocks. Total of 7 hours a week, 350 hours a year, but he's going to get that same extraordinary 5% return. And he's going to earn that 5% on some real money, on $250,000. $12,500 a year, 350 hours. He's going to make $36 an hour. So that's no longer less than a Denny's waiter. Maybe that's a TGI Fridays waiter, or even a waiter at a fancy French restaurant like Chez Maurice. And keep in mind, by the way, the 5% is not realistic. What would your earnings be as an investor if your advantage was only 1%? What if, which is even more likely, like most individual investors, you didn't have an advantage? Your advantage was 0 or less because you made mistakes. So what's our takeaway? Don't be an investment hobbyist. Investing is serious business. And don't confuse activity with financial advantage. Instead of spending time trying to beat the market, adopt a simple and sensible strategy to capture the returns of the market. And finally, consider hiring a trusted financial advisor. But here's the last tip. Don't expect him to beat the market by 5% a year either.